things that's really important, I think, that you touched on is geography. Now, I would say that upwards of 90% of this fund is outside of Canada. And I think that's really important because a lot of investors, Canadian investors, often when it comes to alternative assets that are not stocks, bonds, and mutual funds, which is the category you would fit into, a lot of those investments are Canadian focused, which is fine. But tell me why you think, from your perspective as a portfolio manager, there's a huge advantage at looking outside of Canada as a way of supplementing other investments you might have and adding additional diversification.
I mean, I think the last word you said there hits the nail on the head. It's diversification. As you said, a lot of Canadian investors are, hyper focused with their portfolios on investments within Canada, and lack exposure to other markets. So that certainly is something that we provide and always will, despite having the flexibility to invest across North America. We always expect that the vast majority of the portfolio will be invested outside of Canada. Right now, the skew is largely a result of where we found opportunity over the last number of years, and we continue to believe that our investment dollars are better placed south of the border. The investments that we're seeing in markets like Phoenix and Dallas and Atlanta are simply more compelling than those that we're seeing in Canada by and large. So it doesn't mean that we're not investing in Canada, but it means that on a larger scale, we're seeing more and better quality opportunities south of the border.
Yeah, and a term I've heard you use before is risk-adjusted opportunities. And I've heard others say that they're finding greater risk-adjusted opportunities outside of Canada, and especially in some of the cities you mentioned, and including Mexico. Tell me a little bit about the logic behind making that and identifying risk-adjusted opportunities south of the border, both US and Mexico.
Yeah, I mean, Mexico is a fascinating market, and one that we see a lot of upside in over the long term. It's anticipated that by 2050, Mexico will be the 7th largest economy in the world. It's an incredibly young population, and that inherently supports long-term economic growth. And being a part of the USMCA, previously NAFTA, gives Mexico a big leg up, if you will, in terms of its potential growth as well. So the economy's performed reasonably well over the last number of years. It's the US's largest trading partner, and particularly right now, with our focus on industrial, Mexico is a strong manufacturing market for ultimately products that are distributed across the US. So we are very bullish on Mexico. It's not like we're down there, buying timeshares, which would be what a lot of investors would associate with Mexico. But where we're investing is not on the coastlines. I mean, we're not in those resort properties. We're in Mexico City. We're in Guadalajara and Monterrey and Tijuana. These are ultimately the growth centers and the growth engines of the Mexican economy.